I guess just to put the cart before the horse, they've outperformed every company basically on the planet. This is a massive story. It's very misunderstood. I think a lot of people think this is like just a directional bet. They punted. It's a volatile asset. Kind of got lucky. Like that's still the kind of the attitude from the traditional world. I mean, just some of the stats there were insane. The most, not only the best performing stock in the S&P 500, but the most volatile. The corporate, the convertible bonds they've issued have outperformed Bitcoin itself. Like, these are just crazy concepts. And so, the MicroStrategy shareholders, by the way, fully understand this dynamic. They champion the dynamic and they're celebrating. Yeah. It's not like they're getting duped, right? There's a full understanding of what's at play. The dilution is, in terms of shares outstanding, it's accretive in Bitcoin terms. And I understand that's a radical notion. But if the general thesis or hypothesis is like Bitcoin is, whether you think it's a world reserve currency or just like a globally recognized store of value, or just, digital gold that you keep in, your basement as a pet rock, that's still a $10 trillion idea.
Hey everyone, this episode is sponsored by Polkadot. Polkadot is the largest community DAO, empowering 1.3 million DOT holders to shape the future of the network through active participation. With over 500 applications backed by over $6 billion in shared security, Polkadot's adaptable technology powers a diverse ecosystem from DeFi to AI. Join the Polkadot DAO and be part of that transformation. Hey everyone, this episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through its Ledger Secure Chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name and hardware wallets, Ledger, and take control of your digital security today at ledger.com. This episode is sponsored by Mantra. The Mantra chain is the purpose-built Layer 1 blockchain designed for tokenized real-world assets and regulated digital assets, offering scalable, high-performance architecture. Positioned as the blockchain for tokenized RWAs, Mantra is onboarding traditional financial institutions into Web3. Join the ongoing OM Gen Drop campaign and be part of the future of regulated digital assets today. Welcome back to another episode of On the Margin, and joining me today is Dylan LeClair, Director of Bitcoin Strategy at MetaPlanet and savant of all things Bitcoin corporate treasury insights. Dylan, been a long-time fan of you. It's great to see you evolve over the last few years and really get some interesting insights and ideas on how Bitcoin is starting to intersect with the TradFi world. So super stoked to get you on the show today.
Appreciate it, Felix. I'm happy to be here. Been a follow of your stuff on Twitter for a while, and tune into Blockworks as well on the margin. So yeah, man, I don't think actually to give you props to start. I don't think many people have navigated the macro as well as you in the past couple of years, and so big props, and the content's been great. So I'm pumped to be on the show.
Awesome, yeah, I appreciate that, dude. That means a lot. Well, cool. I want to get you on the show because everybody's starting to talk about MicroStrategy and what's been going on. They had their earnings release this week, which had some really interesting insights. But before we get in there, I just want to get everybody up on the same page here on what we're talking about when we're talking about MicroStrategy. So, some people might have heard about it, heard about Michael Saylor, the CEO, and what he's been doing there. That's really unique. But just want to, go in here with just the, get a foundation here of getting everybody on the same page of what is MicroStrategy, what have they actually been doing, and what's really unique about it with respect to the Bitcoin.
This is a 4-year story at this point. I guess just to put the cart before the horse, they've outperformed every company on the basically on the planet. Every company in the S&P 500, and they've gone from August 2020 to today, and they've gone from what is it, $1 billion of enterprise value to $40 billion today of enterprise value, like 45 billion of market cap. This is a massive story. It's very misunderstood. I think a lot of people think this is like just a directional bet. They punted. It's a volatile asset. Kind of got lucky. Like that's still the kind of the attitude from the traditional world. The earnings call yesterday, 2 days back, was, I think, one for the ages, and will be studied for a long time coming. I mean, just some of the stats there were insane. The most, not only the best performing stock in the S&P 500, but the most volatile. The corporate, the convertible bonds they've issued have outperformed Bitcoin itself. Like, these are just crazy concepts. But we can rewind a little bit. I guess the start of the playbook was, MicroStrategy has, 10 years of kind of net income sitting on the balance sheet as cash in 2020, and COVID comes, and it was, there was, you're looking around saying, where can you allocate capital? It's different for me or you, or, retail, or even an institution like a hedge fund. It's like you can trade derivatives, or, have a directional thesis on this asset or this stock. But as a corporate treasury, right, like you're kind of thinking in asset classes, like, do I buy bonds at 1% with duration risk? Do I get 0% on T-bills? Do I buy back the stock? Like, do I just decapitalize the company and return money to shareholders? Like, we haven't really grown much. Our business intelligence company, like our competitors, Microsoft, right? Like that's MicroStrategy's reality in 2020. Like, so what do we do? And they figured, okay, defensive move, let's buy some Bitcoin, right? Bitcoin's our treasury reserve asset. I think over the last 4 years, it's evolved from a defensive position. We're going to protect ourselves against the stimulus to an offensive one, where they realized, that the implied and realized volatility of the stock doubled. The volume on the shares of stock 10x or 50x or something along those lines. And particularly convertible notes on a volatile stock, just basic options theory. The more volatile something is, the higher that option value is. So they realized, wait, we can borrow at 0 for 5 years to buy Bitcoin. And so this was the kind of the early stages, and since then has ramped up and become more refined. And I think that the vision they had to start isn't the vision at all today, right? Where they just have rebranded to a Bitcoin treasury company. It's the only company, the first of its kind, that can basically tap. There's $100 trillion of fixed income that can't buy anything else. Me and you can open up an app. We can open up Coinbase or Cash App or whatever and buy Bitcoin, buy crypto, buy securities or whatnot. If you're an institutional investor, you can only buy small cap stocks, or you can only buy corporate bonds, or you can only do certain things, right? So what MicroStrategy has now evolved into as this self-labeled Bitcoin treasury company is they're essentially issuing Bitcoin-backed securities, right? This is a Bitcoinization of the securities market, and it's still very small, right? Like MicroStrategy's $50 billion. The FANG, the Mag 7 stocks are $1 trillion market caps. But in terms of volume, in terms of these metrics in traditional markets, they're the top of the list, right? They just filed for the largest ATM in corporate history. They're the biggest issuer of convertible notes in the world, right? So like these are really big ideas, and I think a lot of people on the surface would say, this is risky, this is unsustainable, this is a temporary arbitrage that will close. And what Saylor and what MicroStrategy is reframing it as is like, no, like this premium to net asset value is like what you're kind of, that's a traditional sort of framework. Like equity markets are forward looking. We've gone from 1 billion to 50 billion in 4 years. FASB, which will be adopted in Q1, means that Bitcoin will be marked to market quarter over quarter, right? So like MicroStrategy will have like all else being equal, let's just assume Bitcoin stays flat and they buy no more. They'll have an $11 billion earnings print in Q1, right? How do you value that in Track 5?
Yeah,
You put a multiple on that, right? And so no one really has good answers to this, and that's what I think makes the story so compelling. Is I think it's still somewhat early innings for MicroStrategy, but also for the Bitcoin corporate world, right? Because if me or you are thinking about or hypothesizing what does the world look like 20 years from now, whether it's a digital asset world or a hyper Bitcoinized world that the maximalists think will come, like you think that like that in that world, what does a public company look like? What is their benchmark of performance? What is their benchmark for value? Never mind what they're storing value in. And so like, the stuff they're doing, BTC yield, right? It's the derivative of Bitcoin per share, the rate of change of Bitcoin per fully diluted share. Like stuff like this, I think this is meant to, with the long game in mind of presenting themselves and as a completely unique story, right? We're accreting Bitcoin value.
Yeah. So two questions there. First one is, how do we actually value MicroStrategy? You mentioned something earlier there about basically like a premium to net asset value, which is, I believe, just looking at like what is the company worth relative to how much Bitcoin it holds. So is that like you're saying that might be the incorrect way to value the company? And then also just my second question is like, who are the marginal buyers of, let's focus on the equity side for now, but who are the marginal buyers of MicroStrategy equity? Because when we got the ETFs that were approved, originally a lot of people thought that, okay, it's just like a loophole for institutions to be able to buy Bitcoin exposure because they couldn't buy it directly. They didn't want to deal with custody. But now we have spot ETFs. But a lot of people thought that because of those ETFs coming online, we would see MicroStrategy wither away. The absolute opposite has occurred. So yeah, like how do we value it and who's buying it?
Yeah, I mean, there's a big pool of buyers. One is, there's a lot of money just trapped in retirement accounts, tax advantaged, Roth, 401ks, et cetera. A lot of places you can't buy the ETFs. You obviously can't buy spot Bitcoin. You can buy NASDAQ listed companies, public operating companies. There's just people that, there's institutional investors, the capital groups of the world and whatnot. Like they can't buy spot ETFs. You have to buy listed companies. One of the biggest buyers of the stock in recent years has been the debt holders, right? They're converting into common stock equity, right? And that's where the upside's baked in. I think also like everyone has an opinion on it, right? Whether you're long, you're short, you have no position, but you just have an opinion. But I think it's interesting too. There was a couple times in the earnings call where I think Saylor and a couple other executives, but maybe just Saylor, acknowledged the people that were saying, hey, this is overvalued, let me short it. And they're like, we encourage that, right? That's a buy in reverse, right? You go short now, yeah, great. You'll buy it when we need you to buy it. And so that's a really interesting thing. Like when is a public company when is a chair of a public company said, yeah, short it. Like, there's also the structured products, right? So you have MSTY, MSTX, MSTU. For instance, MSTY, MicroStrategy, Bitcoin's volatility is like 55, 60. It used to be like 80, 100. The realized vol has gone down. Well, MicroStrategy intentionally is, levering up to be like 1.3, 1.25, 3, 4x Bitcoin leverage, right? So they're $18 billion of Bitcoin, $4 billion of debt. Their balance sheet is levered BTC. And so the implied vol, the realized vol of MicroStrategy is like 80 to 100, right? And so like we were talking about with the converts, there's a lot of value there in the option value. So this MSTY, which has nothing to do with MicroStrategy, the company, they're just an ETF issuer, yield max. They have like Tesla, Nvidia, and Apple, and all these other ones. They have their ETF, their structured product, buys MicroStrategy and then sells calls, right? And so during a face ripping Bitcoin rally, it doesn't perform as well as MicroStrategy or even Bitcoin, right? But during periods of chop, during downtrends, this I know you can't technically, it's incorrect to like annualize out this dividend, which isn't a dividend in the traditional sense, but just for the sake of the math, like it's doing 100% annualized in terms of dividend yield, MSTY, right? From the proceeds of selling vol on MicroStrategy, right? So that's $1 billion of AUM, right? Like they're buying it. Well, who else is buying it? The 2x leverage ETFs. I think it's like a top 1 percentile ETF launch in 2024, and it launched like a month ago, right? These leverage ETFs, right? So there's all this volume, there's all these buyers. There are different profiles. Some of the buyers are going to become sellers shortly, but the stock's doing $5 billion of volume. That's equivalent to like the tech giants, right? So this ATM, this $21 billion ATM plan, if you just chop it up 252 days a year, 3 years, they plan to ramp it up as the years go. But like, that's, not all that much money, right? It's like, it's as a percent of the volume. I understand, you have to kind of expect these things to hold, but, less than 5%, 3% of the volume day to day. I think that's very, very conservative, right? So I think that, we can expect that to continue. And the dilution is something that we haven't seen this before. Shareholders are cheering it on because you buy MicroStrategy for one thing, you buy it for Bitcoin, right? So when that dilution comes, you're saying, well, hey, I mean, I have 17% more Bitcoin than I did on January 1st per MicroStrategy share, right? So what's the correct way to discount that, right? And like, or what's the net asset value of Amazon? And an investor would say, well, who cares about the net asset value? We're talking about earnings, right? And we're talking about growth. And so, we have a PE ratio of 30 on Amazon, and that asset value is whatever. I mean, you're going to liquidate all the, all the infrastructure. No, you're not, right? Of course. But so this is a bit of a different case, but like, how much is it worth to you to borrow at 0% to buy Bitcoin for 6 years? Like what is that worth? Right. Well, like, I mean, if you borrowed $1 billion of convert $1 billion at zero for 5 years, if you could just go take that $1 billion and put it into 5% cash and you get T-bills. So, okay. Right. And do that math. Right. So that's worth over 5 years. That's worth $250 million. Right. And so, but they're taking that and buying Bitcoin. So if they can borrow at zero for 5 years, how much is that worth to them? Well, I mean, right away, if even if you didn't buy Bitcoin, that could be a massive gain to shareholders just by selling your common stock volatility, right? So like, how do you bake that into a valuation? And I don't think, particularly in a FASB world, right, where now this Bitcoin mark to market is going to be reflected in the earnings.
Super quick, what's FASB there for people that don't know that regulation change?
Yeah, so that's a great point. Glossing it over.
All good. Yeah.
MicroStrategy has when they adopted Bitcoin, there's no clear guidance on accounting. So Bitcoin is treated as an intangible asset. So there was this almost a disincentive to hold Bitcoin as a corporate because you could only, the value of the asset only ratcheted lower. So you buy one Bitcoin for $10,000, it goes to $11,000 at the end of the quarter. You still have to mark it at 10. The next quarter, it goes down to 9,000 at the end of the quarter. You ratchet that lower. You take an impairment loss on your earnings per share, and the value of your Bitcoin is now reported as $9,000. It goes back to 11. You're still valuing it at 9. So they have 4 years of kind of impairment losses that were backdated in all their earnings in their corporate earnings. And once for Q1 of 2025. 6-ish months away, they're gonna basically have, right as it currently stands, a $10 billion gain. So now the Bitcoin, the mark to market value of the Bitcoin quarter over quarter will be reflected in the earnings statement. So I think, there's a whole bunch of things in terms of like event catalyst on the horizon for MicroStrategy in particular, like outside of the general corporate thesis. They're now reaching the thresholds for like the NASDAQ 100. After this FASB print, once they adopt it in Q1, assuming Bitcoin's not, under $40,000, they'll qualify for like the S&P 500, right? So I think there's a chance. This is a different sort of kind of thesis than the structural Bitcoin corporate playbook. But MSTR specifically, I think there's a real chance of like a Tesla moment where, Tesla was on the verge of bankruptcy in 2020 or, those couple years. COVID comes, everything gets destroyed. They throw a bunch of money, kind of reinflate the economy. Tesla, year over year starts to have, the Model Y and all of this, the kind of the cult around Elon, right? That was buying it no matter what. They've been right a bit, but it's heavily shorted. All of a sudden, gamma squeeze, short squeeze, people are piling in COVID stimulus money. People are gambling on Wall Street bets, and all of a sudden Tesla has a profitable year, and boom, like they're all of a sudden, they qualify for the S&P 500 in 3 months. And so what does everybody do that understands that like there's like $10 billion or X amount of billions of dollars of mechanical flows coming 3 months from now? They front run it, right? And so all of a sudden Tesla goes from like this $100 billion company to $1 trillion company overnight, like reflexively reprices higher, right? And because of that, I'm pretty sure they had an ATM, right? Like there was definitely equity dilution there, and the fundamentals of Tesla improved from that, right? So the interesting thing about MicroStrategy is these like bubbles, these like mispricings higher, their net asset value is ratcheting up at that like during those periods. And we haven't seen a story like that before.
Mm-hmm. Yeah. So we got an idea of what MicroStrategy is, what they're doing, what this approach is. And you've alluded to this already, but I want to contextualize why we're all talking about it this week and what happened in that earnings call that you said is one for the ages. So could you just break down like the context of leading into it? Because I know that, the premium to net asset value was like at almost like 3x or something like that. And people were looking at that and then looking at what actually got announced in the earnings call. Could you just break down those two dynamics and what that actually are the implications from there on?
Yeah, so MicroStrategy has they have their Bitcoin value, that people call it the net asset value, and then their market cap. And some people, less the debt. Some people just take the Bitcoin face value. Some people account for the software business. But, there's all these people opining or hypothesizing on the premium to net asset value. And it was high in 21. They weren't really diluting all that much. It was just they did one big debt raise and the kind of mostly cash purchases. And then 2022, was everything obviously in crypto unwound. Bitcoin went to 15K. Their average cost basis was 30,000. The converts were busted. It was a tough time. After, there was all this quote unquote, fear of Sailor getting liquidated, and it didn't happen, and they kept buying. MicroStrategy, was above its cost basis in the middle of 23, and the premium to now was a little bit higher than 1, right? So they started diluting at a pretty crazy pace.
Yeah.
And the interesting thing about that, even when you're diluting at say 1x premium to NAV, right? Say like you're just trading at fair book value. If you have any debt, even though your Bitcoin per share isn't going up because you're just diluting at 1x, your debt solvency ratios are improving, right? Your asset to debt ratios are improving. So they did this through 2023. With the ETFs in being approved at the beginning of the year, there was a lot of thought that certain people were saying, well, this is kind of the end, right? This was a temporary ARB. They were an ETF before Bitcoin ETF, and the premium will get squashed. Maybe they traded at a discount, right? And what happened was ETF got approved, and MicroStrategy's outperformance accelerated. And so that that kind of flew in the face of all conventional thinking. And throughout this year, they've done ATM after ATM, equity dilution after equity dilution. And I think 3 or 4 convertible notes. They did 2 in a week at one point, like $1.5 billion of convertible notes. So now they have all this debt termed out for the next, like 6 or 7 years with a blended interest rate of 82 basis points.
So it's getting issued, for those that aren't in the weeds on fixed income, basically like convertible notes is debt issued that can be converted into equity. And effectively when they're being issued and there's so much demand that it was basically like trading it was being issued at a significant premium, so that the cost for the firm was very low, which is what you're getting at, right?
So let's just say for easy numbers, MicroStrategy is trading at $100 a share. These convertible notes, let's say they're due in 2029. At any point between now and 2029, if MicroStrategy is above $140 a share, you don't get paid back in dollars. You get paid back in MicroStrategy stock that's issued, but the issuance price is $140 a share. So MicroStrategy can go to $10,000 a share, and you're still getting the stock delivered to you at 140, right? So that it's a call option embedded in the debt instrument. And because MicroStrategy is so volatile, it offers a risk. It offers a risk profile or a return profile rather that you just don't see in fixed income, right? I think the zero coupon, right? Who would buy a 0% bond? That's madness. That's stupid, right?
Yeah.
The zero coupon convertible notes are up 100% from par, right? So the point is that doesn't happen in fixed income. Like it's unheard of. You're happy with getting your money back plus a little bit of a few percentage points. So these are, this is a kind of a new bonkers sort of phenomenon. Usually convertible notes, again, similarly are like kind of, you're a company that's kind of against the ropes. Equity holders hate it because they're getting, likely diluted. But in the case of MicroStrategy, not only is their stock trading at a premium to the value of the Bitcoin, they're selling the stock at a future premium and then taking the proceeds and sweeping it into Bitcoin. So they're monetizing the common stock fall. They're taking the proceeds and buying back into Bitcoin, and they're also tweaking up the leverage a little bit, right? And so which further, cranks up that vol, increases the value of the volatility. So there's a lot of feedback loops. And so, they've diluted, I think there was I think $1 billion or $2 billion of equity dilution in Q3. There was, I believe, one convert. They refinanced a straight bond, a 6% straight bond, and turned it into a convert to save on interest. And every single one of these has been oversubscribed. And, they haven't kind of had any sort of capital markets announcements in a while. And so I said in a couple back channels, I was like, hey, there was a $2 billion ATM that they said kind of open-ended. It was a few months back. And I said like, hey, it would be, I think they might do like a $5 or $10 billion ATM. That'd be pretty crazy. And they come out with a, 2021 plan, which is, the plan of $42 billion of proposed capital raises over the next 3 years. The $21 billion ATM is filed and open-ended. So they could technically, someone jokingly in their replies was like, why don't they sell $21 billion of stock today? Obviously a joke. But the point is, they have this now open ended, right?
Yeah.
And so I think this is just kind of a steady drip of 20, $30 million of stock that's being issued a day to buy more Bitcoin. And so, the MicroStrategy shareholders, by the way, fully understand this dynamic. They champion the dynamic, and they're celebrating.
Yeah.
It's not like they're getting duped, right? There's a full understanding of what's at play, and it flips it flips all common wisdom in the corporate world on its head, right? Because like, what's the meta of the corporate finance world? It's like, lever up at the cheapest rates you can for as long as you can and buy back your stock, right? It gooses your earnings. That's
equity dilution is a bad word normally.
Yeah, it's gross, it's scary. It's, stay away, right? I want to own 10% of Apple stock. Well, now I own 9. Like that sucks. I don't like that. And so, but instead, they've said, well, our benchmark is Bitcoin. Our shareholders want more Bitcoin. This is increasing Bitcoin per share. I think if we think of like a world in a Bitcoinized future, right? Like, never mind the corporate financial engineering. Like I said this on a podcast earlier, like, imagine just a laundromat, right? You're a laundromat. You have free cash flow every year. You have profits every year. You're sweeping that cash flow into Bitcoin, right? You can have a positive Bitcoin per share with the proceeds, right? But at this point, like, MicroStrategy is 120% all in Bitcoin, right? Their software business is, kind of makes the equivalent of the value they capture in, a tenth of one convert, right? Because if you think of the value they're capturing, right? You issue one convert at 0. Do the math on what they could do if they just put that in T-bills because of how valuable that embedded call option is, right? So they're borrowing at 0. They could capture a spread just in the UST market, but they don't want the UST market. They want to buy Bitcoin, which is, returning. I understand you can't project this into the future, but it's gone up 50% annualized since they've adopted it, right? So the shareholders are benefiting with every single capital raise. It's accretive. The dilution term, it is a dirty word, but in this case, it is, instantly accretive to the shareholders.
Fundamentally, why is it accretive? Because again, like, getting back to traditional finance, like foundational, like it would be seen as the opposite of accretive, but you're saying it is accretive. Is it because of the philosophy of Bitcoin and its historical / projected performance, or is there something else there?
Yeah, I think you can strip the exchange rate out of it. Obviously, that's part of the story. The general thesis is Bitcoin is going to continue to appreciate in fiat terms. That's the story. But let's just, in a thought experiment, let's just say Bitcoin is flat. They came out with a concept called BTC yield, which is the rate of change of Bitcoin per fully diluted share. And I understand some people love the term, some people don't. But this is basically just a fully transparent, like, we're going to front load. We're not going to count the dilution of the convertible notes in 6 years when it happens. We're going to take all stock options, all convertible notes, all RSUs, all executive comp, every share outstanding, and we're going to count it right now. We're going to take our Bitcoin and count it right now. Now, what's that figure next quarter? Did Bitcoin per fully diluted share go up or down? That's what they've said is the KPI, the key performance indicator for them. And so it's accretive in the sense that, every marginal dilution at the current valuation, or, even if the stock got cut in half, at that valuation, is increasing Bitcoin per fully diluted share. You're at the equity, the common stock could trade at par value with the value of its Bitcoin at quote unquote NAV, and they could be issuing these convertible notes, and it would be accretive. You could just do the math. You're selling it at a 40% premium if the stock converts, right? And I think that the key worry for a lot of people, the pundits, has been like, well, this can't go on. This can't keep going, right? Like, how much capital can they raise? And they came out on the earnings call and they're like, look, like, we're not slowing down. We're speeding up. They're like, we have no intention to coast or like rest on our laurels. We're the biggest holder. We hold 1%. Like, no, like, we can offer securities that no one else in the world can offer. And so I think that's, when you kind of think about the game theory, when you think about who else can kind of compete, it's interesting because, like, even if the big companies adopt a similar strategy, like, Microsoft has that board proposal to, let's just say they buy $10 billion of Bitcoin. Like, that's a lot of Bitcoin. They'd be one of the biggest holders in the world. They can't do this because their common stock is not Bitcoinized. Right. Their Bitcoin exposure is like 100 basis points, not even, right? So I think it's like 30 bips, right? The point is that unless, and even like the smaller companies, right? Like you can't do it at the size that MicroStrategy can. So it's interesting because, it's accretive in the sense of not, per share dilution or like your voting rights to percent of the company, but it's accretive in the sense of the thing that all the shareholders want. And the shareholders are all Bitcoiners at this point. Like that's, 4 years into this, anybody that, I mean, they did a Dutch auction, a month in, right? If you don't want to be a part of the strategy, we'll buy out your stake at a premium, like, but we're doing this.
Yeah.
And so now, like, I want Bitcoin. Everybody else wants Bitcoin. The dilution is, in terms of shares outstanding, it's accretive in Bitcoin terms. And I understand that's a radical notion. But if the general thesis or hypothesis is like Bitcoin is, whether you think it's a world reserve currency or just like a globally recognized store of value, or just, digital gold that you keep in, your basement as a pet rock, that's still a $10 trillion idea. That's still a 6x from here.
Hey everyone, this episode is sponsored by Polkadot. Out of the 500 protocols, one of them is called Origin Trail, and they're building a verifiable internet for AI, ensuring the provenance and verifiability of data to tackle challenges like bias and misinformation in AI systems. Used by global leaders like the British Standards Institution and the Swiss Federal Railways, Origin Trail is vital in sectors like asset tokenization, healthcare, and the metaverse. Powered by Polkadot, Origin Trail enhances the discoverability of crucial knowledge and secures information in the AI era. Power the verifiable internet with Origin Trail at origintrail.io. Hey everyone, this episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. This episode is sponsored by Mantra. The Mantra chain, built with the Cosmos SDK, is the blockchain of choice for regulated digital assets, offering compliance-ready modules and cross-chain interoperability. With partnerships like a $500 million tokenization project with the MAG Group in collaboration with Zanbank in the United Arab Emirates, Mantra is at the forefront of the RWA revolution. Scalable with up to 10,000 transactions per second and secured by a sovereign proof-of-stake validator set, Mantra is designed for both permissionless and regulated applications, making it easier for institutions to enter Web3. Discover more about Mantra's capabilities and how you can participate at mantrachain.io. All right, back to the show. So what do you think is going to happen to, based on this 2021 plan that they've announced of just basically having it ready to issue whenever they need to? What do you think that's going to do to how both the stock trades and how it trades relative to like this premium to net asset value? Do you think that premium, comes back down to net asset value and stays there because anytime that it gets slightly above, they could just issue more equity or something like that? What do you think is going to happen from here on?
Well, I think, maybe not the last month, but they have been issuing equity. They had that $2 billion open ATM. They've had, 4 or 5 or 6, $500 million ATMs in the past. So they have already been doing this, I think is the point. And so like, I don't think it's an impediment. I think honestly, this FASB accounting change, and also, the BTC yield, right, which is still pretty radical. But the point is, like, all these institutional guys are saying, okay, I can buy IBIT, I can buy Bitcoin now. I'm comfortable with it. Larry Fink's talking about how it's it's bigger than governments, right? Larry Fink's he's the CEO of a $10 trillion asset manager. Okay, it's legitimate now. I get it. Great. Well, like, here's this company that's churning out every year, quarter over quarter, more Bitcoin per share. So like, is that worth just, is that like, is there any multiple or any valuation that like you would pay for that? Like, and I would say that equity markets being forward looking, right? Like on the earnings call, he's like, look, we're a $1 billion company 4 years ago. We're a $50 billion company now. We've been growing at 100% year over year. We're a growth tech company in the NASDAQ. Like, so what's the fair value? Like well, I mean, all these companies trade at multiples. So I think honestly, like there's a chance that I think the risk is that it's not that it, calms down. It's the risk is that it gets more irrational, right? Is that because you have to discount all of this, right? That's the entire world of. So it's like I don't like speculative attack sounds hostile, but traditionally a speculative attack is borrow in one currency to long another, and then you profit on the difference if it devalues. But I think this is a Bitcoin is being introduced to the fixed income markets, and it's being introduced to global equity markets in a way that it never has before. And so like if you kind of play it out and say like, okay, well, Bitcoin, we end up in a world where it wins. It's not just hodled like by the cypherpunks and cold storage. It's not just ETFs. It's going to be fully integrated into the system of corporate finance. And it's going to, some people are going to use it as a benchmark. And I think, MicroStrategy is so interesting because they're the first ones to use it as a benchmark. The miners don't use it as a benchmark. Like Coinbase did a buyback yesterday, right? So like even the people that are like in the crypto world, right? Like still haven't come to this conclusion. So whether it's right or wrong, you can, have your own opinions on it. But I think the conviction is otherworldly, and there's no distraction, right? There's not like Bitcoin and this other thing. They're like, we are solely focused on providing more Bitcoin to our shareholders. We're a Bitcoin treasury company.
Yeah.
I think it's super fascinating.
Obviously, whenever this comes up, the big question comes up in terms of what MicroStrategy doing? What does that bring forth in terms of potential liquidation risk and like systemic risk to Bitcoin? So obviously, we just went through a bear market in the last couple of years, and MicroStrategy did not get liquidated by any means. But obviously, when we look at their capital structure, the equity side is not really levered, but obviously there's this convertible side that is somewhat levered, because they have to issue out coupons to pay off those convertibles. So what break down for us, like, what is the liquidation risk? How do you calculate it, and how do you look at that potential systemic risk that gets instilled into Bitcoin? Because obviously now we're at higher prices, but they've also been issuing at higher prices as well. Their cost basis is higher than the previous low of the last bear cycle. So how do you navigate that?
I think that these converts are very interesting because they've converted all the ones they've issued, and any ones that have been redeemed haven't been paid down. I think a lot of the people opining on it, like Bitcoiners, and I approach the corporate finance world from getting into Bitcoin first, so I would put myself in that bucket. Or thinking about this a few years ago, or thinking about this now, and they're saying, well, what if the debt comes due, right? And it's like you don't pay down debt in the public markets, like ever, right? You roll it, right?
Yeah.
And so I think the worst case scenario is like this debt gets rolled, and they've issued senior secured notes, right? Just 6% interest. There's a lien on the capital structure, and on the.
What are those secured by? Is it the Bitcoin, or is it other parts of the capital balance sheet?
Yeah, there was lien on the Bitcoin. So they had the
Okay.
MicroStrategy,
Yeah.
they have MicroStrategy and MacroStrategy, and they have, kind of like they can isolate the Bitcoin
Right.
on either side. And so that they did the convert partially just for the interest expense, but also it now all of the Bitcoin is unencumbered. So there's that. They've talked, they talked interestingly enough. They've, the converts and the ATM are the bread and butter, but they've also said, well, because I think Saylor's obviously known for his analogies. But he was talking about how they're kind of a transformer or a refinery of Bitcoin return profile, right? So they're taking Bitcoin's kind of as crude capital, and they're taking it and they're refining it, and then they're putting they're turning it into a security on the other side of this convertible note, and so it changes the return profile of Bitcoin, right? Less downside, there's an embedded put, but less upside because there's a 40% conversion premium. So it's like kind of a 50% return upside, but a lot less of the downside. They've also talked about, hey, well, we can issue preferred stock. We'd pay a 7% dividend and then use the proceeds to buy Bitcoin and run that out and see how it plays in 5 years, right? So I think there's basically all of these different ideas to on the liability side, other than convertible notes. But I'm not worried about it at all, to be honest. Even the people that are saying, well, the software business only earns 50 million a year. It's like, well, if you just never mind that what they said they expect in the future, if you just looked at like Q3 or like the last year of like the pace of their dilution, let's just conservatively say it's 1 week of their ATM over the past year basically covers all net interest expense, or is the equivalent of how much they earn on the software side, right? And so, and you would say maybe, well, a pundit would say, well, that's dilutive, And the shareholders would say, well, no, net, we want more Bitcoin, and Bitcoin per share has gone up 70%. So the dilution is fine. So I think, if we're thinking about the liquidation risk in a bear market, I think in 2021, it was MicroStrategy's first stab at it. It was also, it was like my first cycle. Everybody has their kind of first Bitcoin crypto
Yeah.
cycle, and you're like, it's going up forever, and you kind of get caught off sides, and you don't sell, or you don't hedge, or there's no, the risk management concept is very new. The ATM, wasn't ready. They went up to 6 times book value, and I think they didn't have the ducks in line as much. The convertible note at $1 billion was massive as a percent of their total, cost basis. And so, that kind of, got busted towards the low of the bear market. And there was a lot of, convexity works both ways, right? So like there was a lot of short interest on the stock. I think a lot of those were the convert arbors, right? Just kind of like totally hedging out that convert risk. So I think, there's been a lot of lessons learned. Right now, they're, sufficiently well capitalized, right? So $18 billion of Bitcoin, $4 billion of debt. And as they, every marginal amount of ATM dilution improves that. So I think, I'm not really worried at all about the liquidation risk. I think it's more so on, how well they manage this. And from everything they say, that 1.2, 1.3x leverage on Bitcoin, a 5-6 year time horizon. I think it's a pretty strong bet, right?
Yeah.
Terming it out more than 4 years to kind of, because there will be Bitcoin drawdowns. The next time everybody's saying Bitcoin is, this is hyper Bitcoinization, we're going to go down 50%, right? Like it's kind of how it works.
Yeah.
But yeah, it's volatile, right? If you can't handle the volatility, then you should just buy spot Bitcoin, or, maybe buy, SPY.
Yeah, totally. So, I feel like, correct me if I'm wrong, but it feels like a lot of the magic here is that they can issue convertibles at basically like a premium to par. But if things flipped and suddenly like those issuances are at like a discount to par, have you gamed out like what that could do to the dynamic?
So, I guess the what would cause that to be a discount to par, and I think the more so is that right now it's because the stock is so volatile.
Yeah.
And so from and the volatility is not accidental, it's like mechanical. They're purposely engineering this. So I think what's interesting is that maybe one of the perceived risks of like not being able to access this convert financing is, well, what if Bitcoin goes from 55 vol to 30 vol? And then it's, well, it's in the same way that you look at real estate today, and 5x leverage is the norm, right? Right now, 1.3x leverage is MSTR's, kind of target. Well, if Bitcoin's vol goes to 55%, you step that up to 1.6x, right? Or 1.7x, right? And so the point is, like, this isn't mark-to-market leverage like me or you trading on BitMEX, right? Like this is 5-year leverage, and this is common stock that's being issued, right? And so it's a different ballgame. Obviously there's volatility, but this sufficiently well over collateralized, right? It's a different story if they have $60 billion of Bitcoin and $60 billion of convertible note debt, right? That's a different story.
Yeah, it should be noted. It's not that levered, honestly, like compared to what they could do, and maybe it'll obviously increase over the next few years, but yeah, it's not crazy levered.
No, and so that call option. It's crazy that the converts have outperformed Bitcoin, right? They take in 6 converts, and then what's the price of Bitcoin at that time, and how the converts performed on average versus Bitcoin. It's outperformed Bitcoin with an embedded put, which is insane. I don't think they didn't expect that. I don't think that necessarily holds into the future. But the point is, like, as asymmetric as Bitcoin is, that it's even more asymmetric because there's no embedded put in Bitcoin, right? And so like that's, in terms of the demand from fixed income for that instrument, I would imagine that, there's every, bond desk on the, worth their salt on Wall Street called them up, yesterday morning, right?
Yeah.
You have to.
Okay. So zooming out of just MicroStrategy here, you kind of alluded to this with your reference to Microsoft and how like in practice, it'd be hard for them to basically replicate that strategy. But it's so far nobody has really copied it that much. As you mentioned at the top of the show, like you're running this Bitcoin strategy at MetaPlanet now, which is a company that's sort of replicating some of the strategies that MicroStrategy innovated on. But just want to get your high level take on like what are you guys doing there? Is it the same thing? And why have more companies not replicated this, or do you think more companies will start to replicate it?
Yeah, well, I think there's a spectrum of Bitcoin adoption. There's going to be a lot of companies that just buy, like Microsoft coming out and buying $10 billion of Bitcoin would be awesome. It would be great for their shareholders. It'd be great for Bitcoin. It would, push forward acceptance. And I think, there'd be 100 tech companies that copy them. But the MicroStrategy strategy, if you will, like all in, willing to dilute shareholders, getting everybody on board, the board of directors being fully aligned. Like this is a process. It's not something you can just spring upon shareholders. In particular, like with regards to MetaPlanet, I joined the company in May, a couple weeks after they announced the Bitcoin strategy. This is, to put it plainly, was basically a zombie company that we saw an opportunity in Tokyo where there's no Bitcoin exposure anywhere in the equity markets. The marginal tax rate for crypto or Bitcoin gains is treated as like miscellaneous income. So it's up to 55%, but listed securities are 20%. And then obviously the macro story in Japan of, just interest rates and the weak currency and debt to GDP. So we saw a really interesting opportunity to kind of replicate this. And, the market cap of the company was like $15 million in April. Right now, and, who knows what it does. But right now it's around 380 million. And we have I think we have 1,000 Bitcoin. We're like the 18th biggest public company Bitcoin holder in the world in 6 months. And the shares outstanding have tripled, right? So the point is that shareholders are pumped, right?
Yeah,
It's
yeah.
it's the best performing stock year to date in Japan out of 4,000 public companies. That can obviously change. But we've stated it publicly that we put out on a TSE, Tokyo Stock Exchange disclosure in English and Japanese, and we said, look, this is how we're measuring performance. We're looking at Bitcoin per share. We're going to use everything in our toolkit as a public operating company to do so. So that includes equity dilution or fixed or debt financing considerations depending on the market. And so we're about 6 months in, but it's going really well. I think the Japanese love it because they now have a Bitcoin proxy over there. My Japanese needs some work, but I think more so the point is we've only kind of done really the equity side of things. So we did a rights issue, a stock acquisition rights issue, a free stock acquisition rights issue. So every shareholder got the right to purchase an additional shares in the company at a discount to the market price. But the kind of the interesting dynamic was, so this was 555 yen was the stock acquisition rights price. And immediately upon announcing that, the shares were at 600 yen, the stock doubled on the announcement of 100% dilution. So we had diluted at a discount to the market price, but it was 5 times the book value per share. So our book value was around 100 yen per share. We diluted 100% of shares outstanding at 555 yen. So in net asset value terms per share, it was like kind of a 2.5 or 3x, right? So now we have 5 times the amount of Bitcoin on our balance sheet in 6 months in as the entire value of the company in April. So I think the point is that we understand that that's not a strategy that every public company or many at all would be comfortable with. But for us, we're ready to put our foot on the gas pedal as like obviously like Bitcoin maximalists with a kind of a laser-eyed approach, no pun intended. But yeah, I think do we expect that to happen in Japan with more and more copycats? No, right? Like Japan is a very conservative corporate culture.
Yeah.
Would a public company put 1% of their balance sheet or assets in Bitcoin? Like, yeah, of course. And I think we are doing our part in kind of championing that as MicroStrategy has our small part. But yeah, I think that I don't expect the entire world to be MSTR copycats.
Yeah.
I more expect we'll see, instead of marginal share buybacks in 10 years. It'll be okay. Like how much Bitcoin did we stack quarter over quarter is a more feasible, realistic approach.
Yeah. As we wrap up here, I just want to get, just your high level takes on, the crypto market as a whole, the Bitcoin market, Bitcoin price, where we're at in the cycle, how you think about things. We're obviously like a few days away from the election, and it seems like a lot of the potential price action is going to be anchored to that. But how are you thinking about just, Bitcoin price action as a whole here?
Yeah. I mean, I'm super bullish. I think a Trump presidency would be incredible. I sort of expect 2025 regardless to be a big year. I mean, the ETFs obviously have smashed it out of the park, but I think that the Trump endorsement, even if it's right, like he's a politician, he's just pandering for votes or for lobby money. And it's like, yeah, that's what politicians do. But the second and third order effects of that, I think, are really interesting. Where I've just kind of seen a little bit of it, but they're like the Bitcoin conference. I know a lot of those guys, and they're putting on another conference in MENA, the Middle East, in Abu Dhabi in December. And directly after the Trump announcement, not even him coming into Nashville and talking, but when the announcement happened, we had a bunch of like kind of countries and wealth funds and big capital allocators be like, wow, wait, who said what? Can we come in December? And so I think the point is that every intelligence agency and national security, kind of agency, all these different countries and the BRICS, like Trump says, we needed all the Bitcoin mining in the US. It's an energy. This is like a matter of energy security. And it's like, wait, say that again. And so FASB is a catalyst. I think Bitcoin, kind of doing its thing, and, it breaks a new all-time high. People start talking about it. And, we've had a kind of accumulation for 3 years post FTX. This is very cyclical. I think even if Kamala wins, we see a bull market, maybe not as imminent or not as pronounced. But this is more, and you've been all over this. This is just this is a fiscal matter, right? We're entering a world of fiscal dominance, and deficits aren't going anywhere. And this is not a U.S. centric story. This is a global story. So Bitcoin as an alternative to gold's ripping to new highs. The long end's kind of melting down. I think these are all signs. Like, how much has the long end moved after the 50 basis point Fed cut? And I think the point is that there's now an implicit understanding. This is kind of the market acknowledging that the currency is sort of going to have to be sacrificed to get out of this. And a Trump win, a Kamala win, it's all basically the same. It's just kind of how the dominoes fall. So I'm super bullish on Bitcoin. I don't necessarily have price targets, but I think we meet back in a year, and I would not be surprised at all to be twice as high or 3x from here.
Nice. Yeah, agreed. Well, look, Dylan, that was a ton of fun. It's always great to nerd out on all these aspects. I totally agree that MicroStrategy, I think, is pretty significantly misunderstood. So hopefully this episode helps clear some things up, gives people new things to think about from a guy who really gets it. So it's really great. It was awesome to get you on the show, and hope we can do it again.
Appreciate it, Felix. Thanks.
There's over 500 protocols building on Polkadot, and one of them is called Polymech. Polymech is a decentralized, community-driven funding protocol on Polkadot, enabling regulatory-compliant and transparent fundraising of Web3. Polymech ensures compliance with a novel KYC AML process, facilitating a trustless and automated funding process from fundraising to token distribution. By removing intermediaries, Polymech offers accessible, inclusive, and transparent funding opportunities for all participants. Powered by Polkadot, Polymech is redefining fundraising in the crypto space. Explore how to become a Polkadot VC at polymech.org.